Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about what's happening in the industrial and logistics market. Last week, commercial brokerage house CBRE held a detailed webinar on what's happening in the logistics market. There were over 1,200 attendees on the call. We're going to summarize the perspectives that I heard on that call. The first question is, how has federal stimulus impacted the economy? The stimulus has gone a long way towards smoothing over the impact of the pandemic. We're going to have a very negative year in 2020, perhaps down as much as 6% in GDP. 2021 is expected to be a rebound year of nearly 6% in GDP. We're looking at 2 lost years of economic growth. Much like the residential home market, which has seen large drops in transaction volume during the pandemic, industrial transaction volume has also been down about 2/3. The main reason for this is price discovery. Buyers and sellers haven't figured out where pricing should be in the current market. But where deals are getting done, the capital for the sale of industrial assets has been fairly steady throughout the pandemic. When buyers and sellers come together, the cash is there to get the deal done. The question is, when are distressed assets going to appear on the market? Governments are working hard to prevent troubled assets from hitting the banking sector and the economy. One example of that is a large European bank with about $8 billion in the U.S., and about $5 billion of those loans are in hotels and shopping malls. That bank is offering relief to their borrowers on the sum of their terms until the end of 2021. It's representative of what's happening across the entire banking industry. Bank regulators across the globe have been incredibly accommodating to borrowers, with very few exceptions. Almost none of the distressed properties that have appeared in the market, though, have been industrial. The top tier for investments today are both industrial and multifamily apartments. The small number of rent defaults has shown a lot of stability in the multifamily market, so those are the top 2 assets. Now, within industrial, there's a lot of demand for both big box and cold storage. Lease rates are holding strong, and in many markets, leasing rates are increasing. Sublease space is largely occupied space. It's those companies that are trying to temporarily downsize their space requirements on an opportunistic basis. They're not looking to sell the space, but are hoping to cover some costs within existing facilities by subdividing. Construction so far this year has dropped by about 30 million square feet in the current quarter. But at the end of Q1, there were more than 300 million square feet of space under construction in North America. That's an all-time high, and pre-leasing is in the 30% range for that space. We have record low vacancy of 4.5% across the industrial market. Compared with 2008, the market at that time had a 7.5% vacancy rate and very quickly moved into an oversupplied situation. Groundbreakings have dropped in the most recent quarter, and it's expected to drop the supply in the coming year. The biggest demand driver is e-commerce. Amazon themselves are in fact the largest driver. Retail sales over the next couple of years are expected to grow to 39% of all retail, and final mile logistics are the biggest area of change. Walmart and Target are extremely effective omni-channels with in-store pickup. Some independent third-party fulfillment centers are coming into the market to provide omni-channel logistics, fulfillment, and last-mile inventory. There are a few distressed properties appearing in industrial, but those that are appearing in the market are typically owner-occupied properties where the seller needs liquidity elsewhere in their business. In fact, this mirrors what I'm seeing as well. A friend of mine was looking at a manufacturing company with a weak balance sheet that was looking to do a sale-leaseback of a factory. Across the different regions, in the Midwest, the markets are remaining strong. The same is true in the Northeast. The only area of weakness right now is on the West Coast. Amazon is clearly the elephant in the industry. The company has grown from adding 25 million square feet of space per year to more than 50 million square feet of new capacity each year. Amazon has grown from 70 to 255 operational delivery locations. And in the coming year, Amazon has 45 new sites in their pipeline. These are mostly non-sortable fulfillment centers. The sortable facilities are multi-story facilities, and the sortable facilities are more efficient because they have air-conditioned space and you can take full advantage of not just the footprint, but the entire volume of the building. When you're dealing with multi-story logistics facilities, your operating costs are considerably lower. Now, there's a number of family offices, REITs, and tax-sheltered purchases chasing opportunities in this sector. The big box single-tenant warehouses over 250,000 square feet are considered a safe haven investment. They're attracting large amounts of capital both on the debt and the equity side. Now, when development slows down, we often see a precipitous drop in land prices. That's not happened this time around. When you consider how long it takes to get these projects entitled, the owners are not selling the land at fire sale prices like we've seen in previous downturns. They see the long-term value, and they're looking beyond the current pandemic to realize that value. When we look at lending in this space, the debt yields are in the 7 to 8% range for industrial, and these assets are not very highly leveraged. The loan-to-value ratio is typically in the 50 to 60% range. So if you have the opportunity to build some high-quality relationships with industrial customers, this might be just the area for you to invest in the year 2020. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.